There was no breaking news banner, no big dramatic announcement. It was just this quiet move in the background. And then all of a sudden, the silver market just shook. Prices dropped, fear spread like wildfire, and thousands of investors just froze, wondering, what in the world just happened? And more importantly, what do I do next? I remember years ago, I watched this veteran trader as his screen turned completely red. I mean, total sea of red. And while everyone else was starting to panic, he leaned back in his chair and smiled. He told me that markets don't exist to hurt you. They exist to test your conviction. He didn't sell a thing that day. Nope, he just quietly got himself into position. And honestly, that's the kind of moment we're in right now.
This is the Bullion signal, and our whole mission here is to help you find that signal in all the noise of global finance. So if you're looking to build the kind of mindset you need to navigate these pretty uncertain times, go ahead and subscribe. That way you won't miss this kind of analysis when it really, really matters. Okay, let's dive right in. In this explainer, and this is part 1 of our framework for uncertainty, we're going to cover what these market shocks are really about. And then we'll walk through the first 2 pillars of a disciplined mindset, the correction classroom and the certainty trap. This will get you all set up for part 2, where we really get into the actionable strategy. First things first, it is absolutely crucial to understand that all this volatility we're seeing, it's not happening in a vacuum. What's going on isn't just random. It's actually a symptom of much, much larger shifts happening just beneath the surface of the global economy. Just think for a second about how all these pressures connect. Governments are swimming in unprecedented levels of debt. To deal with it, central banks have to keep interest rates artificially low, which of course just fuels inflation. Well, this tests everybody's trust in our financial institutions. And it's all happening while geopolitical tensions are creating massive disruptions in supply chains. So, yeah, this is the environment that makes shocks more likely and a whole lot more impactful. So, what really went down? Well, the CME raised margin requirements. What that does is it forces traders who are using leverage to either put up more cash or sell their positions. And you know what? Most of them sold. So underneath all those scary headlines about a crash, something fundamental was happening. A massive transfer. Assets were literally moving from the fearful and over-leveraged folks, what we call the weak hands, to the patient and disciplined investors, the strong hands. And this brings us right to the first pillar of our framework. Now, this isn't just some tactic. It's a fundamental shift in your mindset. You have to learn not just how to act, but how to think when conditions get tough. Because that's when real progress is made. So here's the crucial point, right? Market downturns aren't just financial events, they're huge educational opportunities. You're going to pay tuition one way or the other, that's a guarantee. The only question is whether you're going to pay with panic decisions that come from fear or with the calm resolve that comes from patience. Let me tell you, panic is the most expensive tuition you will ever pay. The great wealth builders, guys like Warren Buffett or Ray Dalio, they get this. They made their biggest moves when everyone else was terrified because they don't see fear as a warning to run away. They see it as a signal of opportunity. And that just goes to show you that discipline isn't some personality trait you're born with. It's a skill you have to train. Think of it like this. You're on a mountain trail. The path suddenly drops. The fearful hiker? They turn right back around, convinced the whole mountain is about to collapse. But the disciplined hiker? Well, they slow down, they adjust their footing, and they keep climbing. They understand that a sell-off isn't the end of the journey. It's just the part of the trail that demands discipline. So how do we actually put this into practice? The very first shift you have to make is to stop obsessively checking the price and start checking your strategy. Seriously, remind yourself of your time horizon, your risk tolerance, the real reasons you invested in the first place. If those things haven't changed, then your focus needs to shift from, why is this happening? To, okay, how can I prepare for what's coming next? I'm genuinely curious to hear from you on this. When the market gets turbulent like it has been, what's your first gut reaction? Is it fear, curiosity, something else entirely? Go ahead and share your experience in the comments. It's a fantastic way for all of us to learn from each other. All right, let's move on to our second pillar and see how this all builds. This one deals with one of the most paralyzing human desires there is, the need for certainty. We're going to explore why waiting for that all-clear signal is often the single most dangerous strategy you can have. And this, right here, is the core idea of Pillar 2. The market swings, the ups and the downs, that's just the nature of the game. The real danger isn't the movement itself. No way. The real danger lies in how our emotions cause us to react to that movement. You see it time and time again. The vast majority of investors make their absolute worst decisions at the point of maximum fear. They sell low because they're waiting for the certainty and the comfort of good news. But here's the thing. The greatest opportunities almost never show up with good news. They arrive when the charts look ugly and the crowd is absolutely convinced the story is over. And this principle goes way beyond just investing. Think about it in your own life. When your job feels unstable or your business hits a wall, that's your personal margin hike. Life is raising the requirements on you, and it's asking, so are you serious about what you want? The people who retreat, they lose their position. The ones who lean in, they become owners. This slide just lays out the two mindsets so perfectly. The emotional investor sees a threat and immediately sells just to relieve that feeling of discomfort. But the disciplined investor sees the exact same drop as an invitation to ask, okay, what's really changed long term? And they see an opportunity to accumulate at a much better price. Ultimately, it all boils down to your time horizon. The emotional investor is trapped in the present, just trying to survive the pain of this one moment. But the disciplined investor, they're always positioning for the future because they understand that today's discomfort is simply the price you pay for tomorrow's opportunity. That little distinction compounds into massive differences over time. So, we've now covered the first two pillars of the mindset. That's the foundation. In part 2 of this explainer, we're going to build on this by creating a practical, hands-on framework for action. So in our next explainer, we're going to do a quick recap of these first two pillars, and then we're diving deep into Pillar 3, positioning over reacting, and Pillar 4, how education builds unshakable conviction. And then we're going to tie it all together into a strategic framework you can actually use. Look, you're not on this journey alone. You can join a growing community of investors right here who are all committed to choosing clarity over chaos and discipline over drama. So, here's your next step. If you found this valuable, subscribe to the channel. Make sure you turn on notifications so you do not miss part 2. And get ready to turn this mindset into a concrete strategy. Let's just end with this final thought. The storm, the market volatility, the uncertainty, it doesn't get to decide your future. Only your response to it does. That's where all of your power lies. And finally, just a quick reminder that this material is for informational and educational purposes only. It is not financial or investment advice. Please always do your own research and consult with a professional.